And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the market forecast for Friday, July the 29th. My name's John Hoagland. Thanks for trusting me with your time. It's the last trading day in July. August 1st is Monday. Got a special birthday in my family. My brother Tom's birthday is Monday. Hopefully he'll be here and I can wish him a happy birthday. But as always, on the market forecast, our focus is on accurate context, always thinking about risk management and staying patient in our trading. Today is Friday. It is Capital Preservation Day. If you've had a good week, the last thing you want to do is wreck it on Friday. It's usually my goal to make a little money and call it a week. Happy birthday to Geddy Lee, the bass drummer or the bass player for Rush. It's also Neil Doughty's birthday. Neil Doughty was the keyboard player, the piano player for REO Speedwagon, a wonderful musician. Today's also the day NASA was created in 1958. All right, economic numbers this morning, 7:30, personal income and outlays. Income up 1.6%, outlays 1.1%. We're still out there spending money, so I guess that's keeping the stock market strong, right? Quarterly employment cost index. Last quarter was 1.4. They were looking for plus 1.2. Came out in the middle, plus 1.3. So a little bit lower cost index this quarter than last quarter. And we are still waiting for the 8:45 Chicago PMI and the 9 o'clock Michigan consumer sentiment at noon. The rig count, Baker Hughes rig count for you crude traders. We'll be watching that as well. Stocks continued higher yesterday, held higher in large part overnight, getting a little bit of a pullback to the downside this morning. But that big boost yesterday after the close was created by some big tech earnings. Amazon and Apple both beating expectations. Amazon by collecting more fees from Prime subscriptions. You can look for more of that in the future, and Apple phone sales actually rose 3% when they were expected to drop by 3% in quarter two. Stocks set to close the second straight positive week. What recession? Eurozone GDP surprises to the upside, rising 0.7%. They were looking for 0.2% rise. Canada was looking for a drop of 0.2%, and their GDP just came out at 730, flat. No gain, no loss in the GDP in Canada. Crude prices have recovered yesterday's losses as we prepare for another week of OPEC plus meetings next week. As always, make sure you hit the lucky like button, share, comment, question, feedback, heckling, and love are always welcome. And subscribe to our YouTube channel. You get notification when we do go live. The VIX is down again this morning, 2204. The fear factor just kind of coming out of the equities, at least for now. The dollar index largely flat, a little bit lower this morning at 106.3. The yield on the 10-year down to 2.7% after the close yesterday and trading very close to that this morning. As always, we are going to check in with everybody. Shaw, good morning, happy Friday. Yes, preserve that capital. Scott saw and he conquered. Kushu, good morning. You saw Cunningham. If I'm first again this morning, I think I swept the week. T-shirt, it's a good thought. You are the first one in there today, so you win the prize. Tachyon, good morning. Charles, Brian, Jules, Alfred joined Make-Hogue Money twice this week. Time spent was worth its weight in gold. Well, good, Alfred. I'm glad you enjoyed it. We are going to probably be expanding it and expanding it very soon. It seems to be popular. Seems people are getting a lot of value from it. So we want to provide as much of that as possible. And don't forget, always looking for feedback and ideas on how to improve it. Frederico, my brother Rick, good morning. I love you. Marcelo, Orion, good morning. Bill, Chris, George, good morning. Lacey, everybody says good morning. Dan Trader, John Doherty, good morning to you, sir. Serenity Trader, Viva Mexico, hola amigos, buenos dias. DA, good morning. Tachyon down 300 for the practice account yesterday. Was testing micros with NQ. Traded around 11 hours. Got better understanding of myself. Will improve my trading today. Your Tachyon, your cognitive efforts to continue to improve your knowledge of how markets work and yourself will certainly pay off for you in the long run. Good morning, my guy Vince. Dark Kevin, good morning. Unicus, morning all. Quote for the day. Unicus's quote for the day. Having trading discipline is the beginning. Keeping discipline is the progress. Staying disciplined is the success. Love those quotes, Unicus. Thank you very much for posting those. Theo, good morning. Dimitar. Denise, good morning. Channing, looking nice in the ball cap. It's casual Friday. I usually dress down a little bit on Fridays. Vince saying happy birthday to my brother Tom. I don't see him here this morning. Maybe he started celebrating early. Ted Letter Opener, good morning. Trading Research, Murphy's Law Day, good morning. Well, sorry about that, Trading Research, but you're here today. That's the idea, is always be trading for tomorrow. Hegel Matters, good morning. Never a straight answer. NASA, never a straight answer. Ron, good morning. I asked aloud yesterday before each trade, is this in my best interest? And it was helpful. Thanks. Good. Some of those impulse trades we take, we never really think through. Just taking that second to ask yourself, is this in my best interest, makes us think about them a little bit. Yesterday was pretty interesting. Jerry is awake. Hopefully John is too. Good morning, Andy. Good morning, Terry. The rooster, John, got tilted. I got tilted yesterday and set myself back $2,000. Going to be more careful and stick to the strategy. I'm sorry about that, rooster. Yesterday was a really easy day to get tilted. I was going to talk about this in the S&Ps. And last Tuesday, on Wednesday morning, I said there is a paradigm shift in the S&Ps, in the equities markets. For the first time this year, we saw a big update on higher volume and an increase in open interest. That's something we haven't seen, and it's been very difficult to me to believe what has happened since last Tuesday. We've gone all the way up through weekly kickoff high today, which, weekly kickoff high is an important level. But it was hard for me to believe, even though I was saying it, it's hard to believe. You have to be able to learn to trust your hypotheses. And as long as those hypotheses continue to play out, you got to trade to those strategies. It was a very difficult week because I didn't believe what I was seeing. Everybody else is talking recession and the low is not in and we're going to tank, and all of these people on these talking heads on these television shows and expert economists and all this. I'm seeing something else. It's hard to trust what we see and what we think we are seeing in the markets. Even after 30 years, it's difficult to trust when everybody else is saying one thing and you're seeing something else. And Joe, good to see you. Brody, Rob T, George Duque, good to see you. Randall, Zurain, good to see you. Bill Phillips, happy birthday, brother Tom. Stephen C, William, Albert, Rusty Golfer, my spirit animal. Randall, Orion, welcome to my world, right? Patrick, late again. Good morning, all. Well, you made it for the chart, so you're in good shape. Yeah, that was That rally yesterday, doesn't it kind of remind you, if you've been around for a little while, the market seems to be going back to what it does when it goes up. It gets the short time frame traders picking tops, looking for the short. Everybody looks for the short. Everybody looks for the short, and then the market grinds those shorts to a pulp as it continues to push higher and push higher and push higher. The one thing you don't want to do is to fight those. I think a lot of folks were looking for a rotation back to the downside yesterday. It just didn't come. Yeah, we are above that uptrend Daniel on the ES. We're going to see that. James Harris, good morning to you. All right. I think we've taken care of pretty much all the other business. You might want to wear shades today because your future is so bright. You're going to need to wear shades. Let's take a look at the E-mini S&Ps to start this morning. All right. So this is last Tuesday. This was the day we broke out of this range. We broke out of this trend line. We saw an increase in volume a little bit, but it was the increase in open interest that stuck out to me. And I said on Wednesday, I think that there has been a major shift in personality, a paradigm shift in the marketplace. And I, again, had a hard time believing it myself. Got to remember that the stock market is not necessarily the overall economy. We had another healthy upside day yesterday on increasing volume, adding another estimated 15,000 in open interest. When we're looking at the auction process, we have price, which is the advertising mechanism. We have volume, which is the driver of price, and we have open interest, that is how much money is coming into the market in that direction. And we've been seeing open interest on higher on up days. We had 3 down days here. One of them was an up day. These 2 were down days. Up day the day before yesterday, up day yesterday. We closed right at weekly kickoff high. Weekly kickoff high is 40.75 even. We closed yesterday at 40.73.50. And then after we closed, we put in what I'm looking at here is kind of a late spike. This is the 200 session moving average. Let's get this figured out here. So this is the 100 session moving average. This is the 200 session moving average. So we drove price right to a level that a lot of traders are going to be looking at. We have some pretty decent space above here. We may just kind of get stuck in this upside goo a little bit. Who knows what's really going to happen? So another healthy upside move yesterday. Okay, well, here's where we settled. We settled here, and then we continued to push to the upside thanks to a couple of major tech companies. I'm going to be calling it a late spike. There was okay volume on it. It wasn't tremendous, but price continued to push above a known area of value and didn't have time to accept. Well, look at the overnight. We had a lot of time to accept the higher pricing in the overnight. We're opening with a gap. We had some information this morning that came out that pushed us towards the gap close, but it still looks like we're going to be opening with a gap. So we've got late spike rules. Opening in the late spike indicates a probable acceptance of higher pricing. Opening flat out above it, that's the strongest. Opening in it, that's the second strongest upside move. Opening below it is rejection of higher pricing. We also have gap rules today. If we cannot close the gap and we're basically staying in the late spike to the upside, that would mark acceptance of higher pricing, and we would be looking for opportunities to buy weakness today to continue this move to the upside. Look at how close settlement was to closing at or above weekly kickoff high. I would just call this within the weekly kickoff range, because as we know, there is nothing finite in futures trading. Nothing finite in futures trading. We also have another potential special situation where if we open above value and we accept value from yesterday, that's a subjective term. Usually it's going to be time and volume and participation that's going to tell me that we're reaccepting value from yesterday, but that could put forth into the value area special situation play, which the rule states opening outside of range. So this isn't a very strong signal if we do get back into value because we're still largely in range, but we've opened with a regular trading hour gap. So with that regular trading hour gap, if we accept inside of value from yesterday, again, subjective. Some people say you need 2 30-minute bars to close back inside value to mark acceptance. This is a tricky play. Sometimes it'll come in, tease you, come in, get you short, get you knocked out, get you short, get you knocked out, and then finally capitulate at the end of the day. The rule states acceptance in yesterday's value area creates a higher probability of price reaching out and touching the low of the value area of the previous day at some point during that session. You can show acceptance inside value early in the session, trade higher, and then rotate all the way back to the low of value at some point during that session, maybe at the end of the day. We've got a long way that we've come this week and the week before. There's always the potential for some long liquidation, some profit taking. But as if we can't close this gap relatively early, we don't show any signs of acceptance of value from yesterday, we're going to see this market potentially continue to move to the upside. You know, that paradigm shift that we found on Tuesday it's been grinding up shorts ever since. That's what happens back here. Here's the continuation chart. Okay, that's what the market does in these type of situations. It shows a weakness. Shorter time frame traders barrel into the shorts, and then they get ground to the upside. We get short, we grind to the upside. We get short, we grind to the upside. It's what the market has been doing since Tuesday. Again, it's been very difficult for even me to believe, and I called it. Well, at least for now. I'm not saying that the low is in, but there is something else going on, that there is a new personality in the equities, and I'm looking to, at this point, to try and buy weaknesses. This week it was very difficult to get into some upside moves. There were some downside moves that went deeper than I was looking for. But again, today we've got 3 potential rules here: late spike rule, gap rule, value area special situation rule. The spike rule, opening in and above, has been very powerful in recent history. Let's take a look at crude oil. Okay, we've broken out of the channel. It's this channel line now seems a little bit obsolete. Now I see that we're kind of creating a triangle formation, and I'm going to focus really on the extremes of this triangle. Open interest increasing, it builds energy. I'm going to focus on the extremes, and the extremes are coming pretty close here in short time frame. It looks like we're getting a move towards this upper trend line, and looks like we've left the opening range, the low of the session. Wait. Let's take a look. Yep, we got the opening range, the low of the session. One of the more reasonable ones we've seen. It's 21 ticks. This is a really easy to take opening range trade. Sorry, we missed it in real time. We're about $2 or 3 minutes too late. And I see a question here. Thomas W. All right. So this volume profile closes at 3 o'clock. It closes on the cash market close, the New York Stock Exchange close. You notice that settlement is attached relatively close to that level. This is where the real close is in regular time frame. Anything that happens after, you can see there's very low volume. Anything that happens after that, it's meaningful, especially in a situation like this, but it's not what I call part of the regular trading hours. All right, so if you're going to be using that as your part of your profile, you're going to have more information up there. You're going to change value. But if I'm going to be looking at the regular trading hours as the actual close, that's where I'm getting the different look than yours, Thomas. It's okay if you want to add it. If you don't want to add it, use it consistently. Okay? All right, so here's crude oil. If we get an opportunity to get a move back towards the opening range, I would probably think about it. So here's the 30. No gap, opening above value. We've got, this was the trend line that we were looking at that we've now broken. It's now pretty much moot, but now here we are. We're right at the upper extreme of this kind of coiling activity. This is an important inflection level, ladies and gentlemen. Whether it blasts through and continues or fails here and goes lower, there's some fish here. You can't suggest either way, but the one thing I can say about this is it offers the opportunity to limit risk from either direction. We haven't seen much of a move above it here just yet, but again, this offers the opportunity to limit risk. We may come back and see how that played out. Here's the Nasdaq, similar but different. Okay. Again, this paradigm shift that happened in the S&Ps happened in all the equities. It's again been very difficult for even me to believe, even though I called it. We had 3 days of coming back. Bull flag. We broke out of the bull flag 2 days ago. Continuation. We did not close in regular trading hours above weekly kickoff high. We have the late spike. Again, here's settlement. Settlement was 12,737.50, where weekly kickoff high was 12,750. So we did stop short of it, but I would certainly call this in the weekly kickoff range. Now we've got the late spike. We've got some overnight. Now I would call us a little bit short in short time frame. Overnight inventory to the short side, an attempt to come back and close the gap. Remember, my market closes at 3 o'clock. That's the cash close. That's where settlement is attached to. So we do have a gap in regular trading hours. Late spike, opening above in the late spike is acceptance of higher pricing. Unless there's rejection, which rejection would be, look at all we have here. We have weekly kickoff high. We have value high. We have the recession high. We have settlement. There's just a whole bunch of stuff down here that is maybe going to be magnetic. But whatever happens there with all of that convergence, there's fish here. There's fish here. Take a look at gold. Still in rollover. We are trading the December contract, I hope, if you are trading gold. So it's still in roll, but we had a 4,000 contract increase in open interest on a breakout move, a breakout of balance, a breakout above the weekly kickoff high, a breakout above last week's high. We got a lot of space above. A lot of space. So as long as we hold here, as long as we continue to see volume coming in and open interest coming in, we're going to start to look to buy weakness, which is what I'm thinking about doing today. It's going to be a tough day to do that. We open, we close the gap right away. Are we showing signs of acceptance inside of value from yesterday? I don't think so. Not yet. We're showing rejection at that level. If I'm going to be trying to buy weakness, this might be a level that I would look at. I'm busy right now, but if we get the opportunity later, it might be an interesting spot. We do have some weakness in structure down below. We've left a couple of naked points of control off this low, and we do have an unclosed gap here. So again, if we do and end up re-accepting below weekly kickoff low, we can come and close all this unfinished business out, on this weaker structure out, before continuing to the upside. But I think we've got a really good opportunity at value high from yesterday to show whether we're going to accept inside it or whether we are going to reject. So far, we're seeing rejection and 3 attempts on a 30-minute bar to go back and show some sign of acceptance inside value from yesterday. We're not seeing it. We're not seeing it. Overnight inventory is largely at this point resolved. Okay, I think it's been reconciled. I'm not looking at any longer time frame traders that are holding too many longs or too many shorts here. So I think we are free to create as traders today what is going to happen in gold. Alrighty. Here's the euro. Let's go to the daily first. So the euro is really still range bound. I mean, just really not doing much of anything. We lost 1,700 in open interest on a doji daily. Lots of confusion at points during this. We've got a pretty established area of balance, and we certainly have an established area of balance along the high here. This weekly kickoff level has been there for 3 weeks, and boy, has it been resistant to 1, 2, 3 really solid points of contact where buyers just backed off and they could not exhaust the sellers up above that level. So we're really range bound. We're short time frame controlled. There's no rush here to get into too much. We looked a lot higher last night after the GDP came out. We looked above this channel, but in regular trading hours, we're far from finding acceptance outside this channel. So we had a lot of overnight longs that have now been reconciled. We opened outside range. We are now inside range and showing certainly potential signs of acceptance of yesterday's area of value. Sometimes this is what happens. The market comes and just rips through to the low of value from the previous day. Not suggesting that's what's going to end up happening here, but it seems like it is. A lot of times the market will hold up here and then finally show some sign of acceptance and then move to the other extreme of value. But this is a prime area, prime example of value area special situation play. We were too long. We came back. We're showing signs of acceptance in momentum in yesterday's area of value. You had to be pretty quick to catch this move. And that sometimes you're going to miss it because sometimes that's just what happens. Nothing happens exactly the same way twice. And when you finally get the right answer for the markets are going to change the questions. So maybe we'll come back and see what happens here. The 10-year. Yesterday we were right here when we were talking on the market forecast, and I said this can provide a really big opportunity in either direction. And it continued to push higher and then fell into balance. Balance overnight. The market opens and drives through both of these levels, weekly kickoff high and this trend line. You can see where it held this trend line right here, right about here before the open. And then finally we reject value from yesterday. We got points lower with which to look for opportunities. I still believe that this market is in large part short time frame controlled. Even though we added 38,000 in open interest on this breakout to the upside. If this is the case and we reaccept inside below weekly kickoff low, we may have trapped a whole bunch of short time frame longs that may need to recover, that may need to cover those longs. A lot of it depends right here. There's fish here. What side of the boat, we don't know. Although it does allow us the opportunity to limit risk, so maybe we'll lose a couple of worms, but we're not going to lose the rod and reel. And natural gas, we had this big stiff rejection up here at the beginning of this week. We've seen open interest losing on this push to the downside. We've also seen volume losing on this push to the downside. But now we've again shown through time a degree of acceptance below weekly kickoff high. Weekly kickoff high is going to be pivotal today. Look at what it did in the overnight and early in the regular trading hour session. We've tested in the last 4 30-minute bars back to weekly kickoff high, and it has been showing to be resistant. Again, this allows us the opportunity to limit risk. We don't know what side of the boat to fish off of, but we don't have to lose the rod and reel. We can lose a couple of worms, but we're not going to ruin ourselves because this level here allows us that opportunity to limit the risk. That's about all. We had some overnight longs here. Those have now been reconciled. I want to go back and see what's going on in crude oil. Our opening range, did we get a chance to come back to it? No, not yet. This would have been a really good one because it was cheap, and we're already 1, 2, 3 times the risk we would have had to take on this, maybe 4 times the risk we would have had to take on that opening range. Breaking out above this coiling activity, this could be a big move. I mean, at the very least, if we continue to the upside, last week's high and weekly kickoff high, 101.60. I don't want to see it there. I want to see it cheaper, but unfortunately, I don't get to choose. Dollars rallying, Rick says. Okay. All right. So we've got our tasks set out for us. Still holding gaps in the S&P and the Nasdaq, coming into about 11 minutes to the open. It's a hell of a week. I'm personally proud of my ability to recognize a change in the marketplace, and that goes back to last Tuesday. It has not been particularly gratifying profit-wise because, again, I've been having trouble trusting what I'm seeing and maybe being a little bit swayed by some of the talking heads and some of the news that's come out. I mean, we're in a recession. Why should we be rallying? It's really hard to, when there's that much information that's contrary to what you're seeing in the actual auction process, to trust the auction process over the fundamental information that everybody's talking about. It's 30 years of that, and sometimes I beat it, sometimes I don't, but it's always a challenge, and trading is always a challenge. There is, I think that there's a whole lot of people that could be much more successful if they would trust what they see and if they would trust the things that they're looking at more than some of the experts out there. Jim Dalton himself says, Sometimes the best trades are contrary to the most recent market activity, but at the same time, you don't want to step in front of a freight train because everybody likes to try and pick tops and bottoms. We know that it doesn't work very often, and if we do catch a top or a bottom, it's probably more luck than anything else. I'm just going to take my deep breath. I'm going to stay humble, grateful, and creative in my trading today. Looking forward to another great trading week next week. We're going to close up this chapter of the trading book, each of our trading books today, and be looking forward to August next week. August already. My goodness. Time flies when we're having fun, I guess. Get out there and profit. I'll see you in the proverbial trading pit in just a couple of minutes. Trade well and have a peaceful weekend. Don't forget to be kind to yourself and others. Say a prayer for peace on earth and in yourself. Blessings to you all. Trade well, and I will see you Monday morning. Same bad time, same bad channel, and a whole nother fun week next week. Trade well, everyone.